What's up, everybody? Welcome to AR Collective. My name's Athena, and in this video, we're going to talk about different types of trends. Now, understanding what kind of trend you're trading will allow you to figure out whether or not you should be entering any positions, exiting any positions, or maybe just hodling your coins. Now, you might have heard the saying of trend is your friend, and maybe don't trade against the trend. Now, those are all important. You never want to go against the trend, because more than likely, if it's already trending in one direction, it's going to continue in that same direction unless it breaks. So you want to trade with the trend until it's broken. Now, three types of trends we're going to look at are uptrends, sideways or consolidation trends, and then downtrends. Now, when it comes to market structure or overall market structure, we're talking about uptrending, bullish market structure, sideways market structure, or downtrending, bearish market structure. You might hear people say, oh, we had a break in market structure because we went from an uptrend to a downtrend or downtrend to sideways trend. So pretty much anytime the trend breaks, as in it reverses towards a different direction, that is called breaking of market structure. Now let's look at, in detail, how these uptrends look and how you can identify them. Now, when we talk about an uptrend, you'll usually see price going up, right? That's kind of the simple explanation for it. But the most important part here is that we will have higher highs, or HH stands for higher highs. So each one of these peaks, right, either up or down, is called a swing. Oh, this one's a little crooked. So depending on whether it's higher than the previous, that will tell you whether or not it is bullish or bearish. So generally in an uptrend, you will have a series of higher highs, higher lows, higher highs, and higher lows. How can we identify that we have a higher high? Well, look at the peaks, right? This one's higher than this one. This one's higher than what was before it. Higher lows. This one's higher than the previous one, which was higher to the previous one. So that's how we can identify a pretty nice uptrend. And what do we see after? We make another higher high, and then we make a higher low because this one's higher than this one's higher than this one. But then we see something interesting. So we're no longer going from a higher high and a higher low, we're now going to equal highs and equal lows. Now we can identify that by looking at the different swings, right? We had the higher high here, we had the higher low here. Now we having the same, pretty much around the same area, we got rejected, we made a swing. Right, so if we compare these two, they're pretty much equal height, and these two pretty much equal lows. Right, so we move. The big picture is it doesn't have to be exactly precise, right? You might have maybe a little bit higher, maybe a little bit lower. The big picture is we're moving sideways. We're not going anywhere. We just keep bouncing between resistance and support. So this is a sideways trend. So we went from an uptrend, broke bullish market structure, now we're in consolidation trend. So this is usually because there's a lot of indecision in the market. Some people want it to go higher, some people want it to go lower. They're pretty much battling it out between support and resistance. Eventually though, as we can see, we start moving from the sideways trend, break market structure again. Now we're going into a downtrend. So the way that we can see that this is a downtrend, we can compare the swing highs and swing lows to the previous ones. As we can see, lower low, lower high, right? This one's lower than this one. This one's lower than this one. And we can keep doing that. So during an uptrend, you generally want to buy the dips. You want to buy the dips. If you're in a sideways trend, you can trade the range. And what I mean by that is that we can definitely see some support here, right? That was established. And you can trade or enter positions on the lower range, and then you can sell or take profits on the higher range. The only issue is you have to be careful if you are trading the range. If it breaks down, say you're buying here and it breaks down below this level, that means we broke trend. So you never want to go against the trend. You can trade the range until you see a breakout, either to the upside, so price moves higher, or towards the downside. So that's when you should not be looking into keeping that position. Now, during a downtrend, you generally don't want to keep buying the dips unless you're planning on DCAing or dollar cost averaging. if you're not planning on dollar cost averaging, it's going to take a little bit of skill to establish, you know, different areas of support. And you have to set up a stop loss and try to figure out areas where there's going to be a bounce. And then if we are in a downtrend, you generally want to buy the dips and take aggressive profits, right? You want to take aggressive profits because, like we said, a trend is most likely going to continue until otherwise, right? So either you can trade the downtrend, which I don't recommend unless you have a little bit more experience. You can DCA if you are long-term hodling your position, or you can wait for a break of trend. And what I mean by that, we want to see a market structure break. So we want to see something like this. All right, we want to start seeing a change between the lower highs and lower lows, right? You want to start seeing some higher highs, which we start seeing here, or higher low. Oops. So this one's higher than this one. This one is not higher than this one, but this one is now higher, right? So higher than this one, and we continue moving up. So you want to look for areas where it breaks. Additionally, you can utilize support and resistance by identifying or highlighting a trend line, right? We have a trend line here. You can see this is an uptrend. Higher lows, it's respecting this line until we break down from it right around here. And you can even have a higher trend line here on the resistance area. So this has been used as resistance. This lower trend line has been used as support. Eventually, we break down from it. And whenever support gets broken, it becomes resistance. So that's another way of figuring out what kind of trend you're in. Sideways trend, right? You have the resistance here, the support. You wait for breakouts, either up or down. And then a downtrend, of course, you can have a trend line facing downwards in here. So the lower range is support, the higher range is resistance. So then you can start selling or buying at support, selling at resistance. This, and also you have to have, you know, regular support and resistance, not the trend line support and resistance. So let's look at an example of different types of trends. Now you have to keep in mind as well that there are trends within trends. So if you're looking at the bigger picture, if you start scrolling in or zooming in, you're going to see uptrends and downtrends within the big uptrends and downtrends. So let's look at that in detail. So here we are going in an uptrend, as we can see, higher high, higher low, higher high, higher low, higher high, higher low, higher high. We're going to keep it at this for now. Oops, there you go. But if we zoom in, right, there is a range within, or not range, but there's a trend within the trend, right? We're going from an uptrend, and here we have a small time frame downtrend. And that is also broken, and then we have an uptrend again. But on the bigger or macro point of view, we are still technically in a big uptrend that has small uptrends and downtrends from within. So the one that's the most important is going to be the higher, the bigger view, right? The macro view of an uptrend and downtrend. Those are going to be the ones that you have to put the most, not detail, but you have to pay the most attention to, because those are the ones that are important. Unless you're planning on scalping or, you know, doing shorter time frame trades, then yeah, you can focus on the smaller trends. So as we see here, we have established a high, swing high, higher high, right? This high is higher than the one that came before it. A higher low, as you can see, higher than the one that came before it. Higher high, higher low, higher high, higher low, as we can see, all higher than the previous one. Higher high, and then we can see something interesting change right around here, right? We can see that now, if we move down, next thing we get is a lower low, and then a lower high, right? If we look at this previous low and compare it to this one's lower than this one. And we compare this high to this high. This one's lower, right? So this high is lower than this one. So in a sense, we broke market structure, because now we went from higher highs, higher lows, to lower lows and lower highs. And where it became really apparent, as we can see. If you want to take it from the candle or the wick, I take it from the wick. The moment we broke down from this area, this was it. Now this came with a bunch of bad news, of course, but the moment we broke this previous low, which was already a lower low to begin with, that was when it became really bearish. And as we can see, if we continue on, low, lower low, lower high, lower low, lower high, and then we have a higher low here. And then we continue on our big rally. But we went from an uptrend, downtrend, and an uptrend again. Now, if we identify some trend lines, we can do something like this. All right, we can see some support highlighting the uptrend, and we can see a break. So this break with the lower low and the lower high was pretty much nail in the coffin. And then this was the ultimate, like, yeah, it's really looking bad. This is really bearish. But the overall trend, if you understand this concept, you're going to be able to analyze exactly what you're looking at. Uptrend, downtrend. Theoretically, this is like a downtrending consolidation, but still we're in a downtrend. And then we start in an uptrend again, right? We start from this higher low, higher high, right? Higher than this one. Higher low, higher high, and then we continue on making new highs. So this is an example of a trend. Now let's look at a consolidation trend or a sideways trend. Now this right here is a perfect example of sideways or consolidation. As we can see, we're moving from a downtrend and we start having some sideways fun action, right? We can establish a support on the lower region, and then we can establish a resistance in the upper region. Right, so after we have at least 2 touches, right, so anything from this point on you can trade safely because you have established a nice support, you've established a nice resistance, and now you can trade within the range. So you can set your bids here to buy, you can take your profits here, rinse and repeat, unless you break up from this range, and then you can keep it. All right, and then you can keep it. But this is a perfect example how we're going from a downtrend. We start consolidating and then we have an uptrend. Well, potential uptrend. You got to see how this plays out. Also, this coin's very illiquid, so probably not the best example, but beautiful consolidation. So always trade with a trend. Look out for reversals and plan your trades accordingly. Another thing I want to mention is if you're having a hard time figuring out higher highs and higher lows, there's a perfect indicator that can help you with that. And that indicator is called higher high, higher low. So you pop that on, and then you can see exactly the different highs and lows. Now, this indicator is not 100% accurate. Sometimes you have to, just look at it. But it's going to help you figure out, the different highs, the different lows, the swings, which are each high and low, and see if there's any sort of reversals, right? As we can see recently, as we're looking at price right now, we're technically in an uptrend. It's slow, looks, kind of weak, but still a valid uptrend. Now, what you can also do is go up to the higher time frames. This is the bigger picture, right, of how your current chart is looking, or current coin, right? So we went to, well, actually, let me pull up a different chart that is a little bit older. There you go. All right. So then you can analyze higher high, higher low, higher low, lower high, higher low, lower high, lower low, but then big move, high, we broke this high, higher low, and then we broke it. So this is a lower low. So now we have to see where we end up, right? On the bigger time frame, we do have to break this high, 48. But on the shorter time frame, of course, this will be the next high. Because this already has created a higher high, but this will be the next high, pretty much the next region to break. With that said, that is our video today. We looked at trends, we looked at market structure, just basically trend and breaks of trends equal breaks of market structure. Looked at uptrends, downtrends, and sideways trends, and we looked at some examples. Hopefully you guys found this video helpful. If you did, hit that thumbs up. If you have any questions, definitely join the Discord and ask the questions. We are there ready to help. With that said, I hope everybody has a great day. Peace out.